Hi, let's cover my Elliott Wave scenarios on Bitcoin. And in this video, I will cover my 4-hour time frame and 1-hour time frame Elliott Wave scenarios. But before I do, I actually like to talk about this move to the upside because I want to share a little bit of education. Now, yesterday, when I was recording, price was in this range. And I mentioned the probabilities are highest to move up and take out this high. Sure, from a trading point of view, it would have been nice to move into some support to look for long opportunities and take out that high. Nonetheless, the probabilities were highest to move towards the upside. Now, as price then moves up, you have to follow along with what price is doing. The power of Elliott waves is giving you a directional bias. That is a combination of words that I always like to use in my content. It gives you a directional bias and you aim to trade in the direction of your directional bias. Now, as price then moves into that direction, meaning yesterday probabilities were highest to take out that high. That was the directional bias, upside. Now, as price then moves to the upside, we have to follow along. We have to see how is price moving to the upside because we have our areas of resistance. We had resistance here yesterday at 115.7. Next up was like the 118K area. Next up is actually where we are at the moment here, 119.3. And that is why horizontal levels are important. Now, as price then moves to the upside, and it passes this area of resistance, naturally, from a level-to-level perspective, you're looking for the next area of resistance. Oh, cool, we move beyond this, we're looking for the next one. From an Elliott wave point of view, this push to the upside had the highest amount of volume. You're pushing to the upside, you are invalidating a potential flat here or a potential WXY, meaning probabilities are highest. You're looking at an impulsive structure to the upside. This move to the upside also then has the highest amount of volume, and it should immediately click that the moment you get this push up on a high amount of volume, invalidating potential flats or WXYs for a larger range, immediately you have to think, that's a wave 3. Highest probability is that that move is a wave 3, which then also automatically means that you have 1-2s over here, which then also means you're at least looking for a double 4-5. 1-2, 1-2, this is your 3. You're at least looking for 2 more ranges in wave 4s and 5s. In other words, you're still looking for higher prices after this push to the upside, which then also aligns with the level by level approach where, cool, we passed this level on a high amount of volume. We're still looking for wave 4s and 5s, so naturally I'm looking for the next area of resistance, see what price does there. If we pass this, look for the next level, which is where we are at the moment. Pass this, look for the next level. But you're looking for a couple of wave 4s and wave 5s. And this is how new information on the chart can help you with your expectations of what is coming next. But the most important thing in Elliott waves is having a clear directional bias. And then as price moves, you follow along, see what happens, and you adjust accordingly. You don't necessarily, if you are an Elliott wave analyst, maybe an Elliott wave trader, you don't necessarily need to know the exact count. I'm looking for this and nothing else. Wave 5 has to end here, right? This wave WXY has to do this. That's about the bias. Bias here to the upside. If we were looking for an impulse in a 1, 2, 3, 4, 5, yeah, it can end here, can end there, can end higher. It just depends on the move to the upside. And as you get that information, you got to adjust accordingly, which also helps you in your trading. Instead of closing a trade here as price moves up, you see this high amount of volume, you're like, nah, I might take a TP, but it doesn't really look like a place to close because you're expecting higher prices because of the information you now have. Flat, as mentioned, invalid. WXY, also invalid. Reason being, by the way, that price touched the 1.618 here. So we put that one on the chart. So you can see here, price touched the 1.618. You're not looking for a larger range here anymore. And this push, cool, wave 3, looking for 4-5s. I prefer to hold for higher prices. So hopefully by me explaining this structure to the upside, you understand how directional bias can help you in your trading but also even in your Elliott Wave analysis, right? And how you can use new information to manage or trade accordingly. Now then, let's go to my scenarios. So the first scenario I'd like to talk about is an update of the bearish scenario, quote unquote bearish, because in the end it's still bullish, as you're just looking for a larger three-wave corrective structure and eventually price moves up and takes out the high. Now, I don't know how many videos I have posted so far that said probabilities are highest to sooner or later take out the all-time high, because that is the highest probability. Whatever the count here is at the moment, we're still looking for price to take out that high at a later stage. I would personally prefer to not take out the all-time high in a straight line. Instead, I would like to get quite close, not take it out, and then reverse. Because of course, from a psychology point of view and also a liquidity point of view, this move up is quite steep. So you can imagine, and I don't follow any other creators online, I don't follow crypto Twitter, I have zero interest in that stuff. I just follow my own stuff and, you know, trust myself. But I can imagine that price is moving up and everyone's being like, yo, cool, all-time high is coming, more upside guaranteed, blah, 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 blah. So buys are coming in, people with leverage are entering. And instead of moving to the all-time high, you basically drop, stop people out, and liquidate people as well. And if we go to the range at 73 to 49K, then you can see here, price moved down. I mean, here it moved up quite close to the high, lower high, move back down. This was quite a sharp move to the upside as well here. Move up, range, and then a sharp move up, lower high. It got close, but then we still get a retracement. Another sharp move up, another retracement. Now, price doesn't repeat, it can rhyme. There is absolutely no particular reason to say, oh, we are going to take out the low at 107 that we have at the moment, like what happened in this range here. But at least we have to be aware of a larger corrective structure. And from a psychology point of view, it would be interesting, even in the bullish scenario, which I'll show in a second, it would be interesting to create a lower high and then get a retracement to the downside. So the people that are buying the top eventually have a problem down here, right? So they are the ones providing the liquidity, so to speak. So in this scenario here, we're looking for a larger corrective structure. Now there's two ways to go about this. You either have a sideways WXY with a W zigzag, X zigzag family structure, and then a flat ABC, which then is a expanding flat or a running flat, because price here took the high. So your wave C to the downside should then be an impulsive structure, 1, 2, 3, 4, 5 wave move. Could or doesn't take out the low of A, no guarantees, but you're looking for a C to the downside basically. Right? And then after your 5-wave structure down, you look for price to move up. That would be very similar to the Ethereum chart, where on a weekly time frame, where for a very long period of time, we had a multi-year WXY. The last move down to, I don't know exactly what it was, 1400 or something, was a sharp impulse to the downside, and then it reversed to new all-time highs. Now, another way to go about this, so in this scenario here, you need an A, B, and a C to the upside inside B, which I'll show you in a second because I prepared it for you, of course. But another way to go about this is moving this wave X over here. And then this move up is going to be an A, B, and then a wave C to the upside, which I also prepared here to count this as an impulse. So you get that information in a little bit. But then your wave X is going to move to the right side, A, B, C, zigzag in wave X, and only then your wave Y is starting. Now, I'm talking about WXYs here, but we have to be aware that the moment price moves up to 122.8K, which is the 0.9 Fibonacci taken from all-time high to the low at 107, we have to be aware of flat structures, because this is the minimum target for wave Bs in a flat, and then a wave A, wave B, wave C. So a larger flat structure. The moment you take out the all-time high, a flat will always, as a bearish scenario, have the highest probability. Compared to the bullish scenario, of course, continuation, but the bearish scenario is always going to be highest probability a flat ABC. But the minimum target for B is the 0.9, which is here on my chart at 122.8. So the moment we touch it, we have to be aware. Now, it does, of course, mean that if this turns into a bigger ABC, right, either wave X here or wave B, but ABC means this has to be an impulse to the upside. While in the scenario that I currently have on my chart, X over here, and look for ABC, this move has to be a three-wave structure. The difference is an extra wave 4 and wave 5. If you get an extra 4 or 5, you're looking at an impulse. If you don't, you're looking at an ABC. At the moment on the chart, we don't yet have an extra 4 or 5, as I will show you on the 1 hour time frame in a second, which is the reason why I have discount on my chart. Okay. Now, something else that I shortly want to highlight is I got a comment yesterday, which I thought was quite funny. And that's true. Like a lot of people, I suppose, of course, I have a Discord community, but in general, the comment read something like every Elliott Wave analyst was looking for lower prices and a double zigzag, and here we are at 116 or 118K. And then I replied saying, cool, I'm happy I'm sticking to my own stuff and not look at anyone else. Because the moment this move to the upside happened, we had the bullish scenario on the chart as well. And in previous content, this was definitely a possibility, something that we kept in mind. I also highlighted the fact this move down ended on a high amount of volume, right? Which is typically something for C's or wave Y's. So we always kept an eye on this move towards the upside with the WXY double zigzag and the impulse. I have new probabilities now, but in a previous video a couple of days ago as well, I said, hey, we have the WXY double zigzag to lower prices as well as the bullish scenario. I'm basically putting them like almost like both on the number one spot on like equal probabilities, because it's actually not a clear cut like easy way of analyzing the chart, or it's this or it's that. I prefer to now look at this move up, and we were looking for higher prices, and now here we are at 119. Now in this bullish scenario, we have a move to the upside counted as an impulsive structure, couple 1-2s, couple 4-5s, get a corrective move down, ending on a high amount of volume, and you're looking for another leg up. Now this leg towards the upside, if bullish, has to be an impulse. But I'm not looking at this structure up as a wave 3. So in other words, a 1, a 2, and then a 3, and then at a later stage, a 4 and a 5. I don't like that because of the autonomy, I suppose, of this move to the upside. Because if we want to count a wave 3, then we basically need a 1, 2, 1, 2, and then a 3, 4, 5. Well, like it just needs to extend so much further in order to consider it as a wave 3. And also, I do not like to count this as a 1, 2, 1, 2. Second wave 1 is incredibly big compared to the first one. First one is higher degree, this is lower degree, but the lower degree is significantly longer. The 1-2s are not overlapping, which is something you tend to see more often. Just like, for example, I always love this example. Just like what you had here, the 1-2s, and then you get to push up in the wave 3, which then creates the gap. And quite clearly, here you can see there is a big like push in between the potential two wave 2s. It can happen. There is an example on the chart after the ETF low was made at like 38K. Price moved up with a double 1-2, which was separated. But it's not going to be your first thought when you see this. Your first opinion, your first thinking is going to be 1, 2, 3, 4, 5. And then if price moves up on an increased amount of volume, you might consider the potential of looking for a 3. But then this has, of course, to extend. So at the moment, it's still not really a very, very big move, so to speak. So instead, I prefer to count this a little bit different here, which you will see in a second. Now this move to the upside for the bulls would preferably be then a 1, 2, another impulse in a 1, another 2, and then continuation to the upside. Preferably this second wave 1 is not going to take out the all-time high. If you do swing failure it, basically a deviation, take the liquidity, and then move towards the downside. Okay? And then this move down has to be a 3-wave corrective structure. That is something we'll have to analyze at a later stage. Where is my scenario? There we go. Okay. Now the bearish option is of course A, B, and then a wave C. And after wave C, you get a bigger retracement. So it just depends on the retracement. Wave C here would be the same as counting a lower degree wave 1, 1 to 1 to continuation, A, B, C, larger retracement. C is the same as a lower degree wave 1. So the question is what happens once the impulse is finished. I also here wrote a flat because the moment you take out the high, the bearish scenario is looking for a flat over here and then A, B, C, and then move up. It has to be a running flat if so, because you don't actually want to take out these lows here. But at least, you know, we have the option on the chart, a potential flat, not really looking at that here at the moment, to have a flat in a 2 or B and then move 2 or B here. But it is something I have on my chart and it is something I am at least considering. Then we have the move to the upside. Now in an impulse, I would like to see another wave 4 and 5 because the highest amount of volume is in the recent push towards the upside here. You can see here off the low, price moves up, highest amount of volume in the recent move towards the upside. So preferably that is a wave 3 or at least part of a wave 3. Now in this particular case, I count it as a 5 of 3. So it's still part of the higher degree wave 3. That is the first thing that I like to do is, okay, highest volume is in here. It is lower probabilities to count a 1, 2, 3, 4, and then a 5 with wave 5 having the highest volume, right? Doesn't make sense initially from a probability perspective. Wave 3s always have the highest probability of having the highest volume. Now, sub-degree, right? Sure, this is a wave 5 and then a 1, 2, 3, 4, 5 wave structure. So you may think, okay, well, wave 5 has the highest volume, but it's a lower degree 5 as the higher degree 3 still carries then the higher amount of volume. So I basically label it in such a way that we're still looking at 3 here. This is just the internal count of 3. And the internal count of 3, cool, wave 5 being the higher volume one, that is fine. But I don't like to end the highest degree impulse with the highest volume in wave 5. And that's something I explained, I think, yesterday in Elite as well, the memberships, where I said, cool, price is moving up. I updated my count, shared it in Discord with them. And I also said, like, cool, price is moving up, increasing volume, but I don't like to end the highest degree count with a highest volume 5, like this. So that would be your highest degree count, right? The highest degree 1, 2, 3, 4, and 5. And now 5 ends on highest volume. That's not what I like to see. It just, according to probabilities and Elliott waves, that's not something that is very common. So therefore, I prefer to look for a 3, a 4, and a 5. And the sub-degree here doesn't matter, right? That's absolutely fine. Then we have this as a 5, no problem. But I don't like to end the highest degree wave 5 on the highest amount of volume. If wave 5, I want to label it a higher degree 3, look for a higher degree 4 and a higher degree 5. Of course, even arguably more bullish would be 1, 2, 1, 2, 3, 4, 5, 4, 5. Which means you add another wave 4 and 5 at a later stage. Currently here, I have looking for end of 3, get a 4, get a 5 after 5 finished. But if we count this as a multi 1, 2, we get another 4, another 5. But that's only something we can discuss at a later stage once we are at the end of the movement and we maybe consider an extra 4 and 5. But as mentioned earlier, I don't actually like to count this as a multi 1, 2 because of the incredible gap over here. No overlap between the two. Second lower degree 1, much bigger than the first one. Just doesn't make too much sense to me. So therefore, at the moment, I like, when considering an impulse, I like to consider what I have on my chart here. This over here, couple 1, 2s, move up, couple 4, 5s, eventually end 3, then look for a retracement 4 and 5. Target area for 4 is the 0.5 to the 0.236, taken from the low of your 2 to the high of your 3 of the same degree, of course. Currently, that target is 116.9 to 114, with the invalidation being 112.7K. Wave 4 has to be a 3-wave corrective structure. And then we get to the ABC to the upside, and the main difference between an ABC, a lot of degrees here, I'll explain this in a second, but the main difference between the ABC and the impulse is that you do not get the wave 4 and 5 here, the larger 4 and 5. So in the impulse, this wave 3 is the end of wave C. After 3, you get a 4-5. After C, you just go, right? You expect a larger retracement to eventually happen. That's the difference between the two. So on my chart here, you can see my wave A, right? So we have the wave A here to the upside, followed by a short and sharp wave B, and then we have wave C. Wave C, you can have less 1-2s here, 1 2 1 2 3 4 5 4 5, maybe like I currently have 4 on my chart. The issue is you got to really go to like a 3-minute 5-minute time frame to be like, oh, what's happening here? Do we have another 1-2 here? Yes or no? Yeah. So once you it's basically practical versus theoretical. Theoretical, we might be able to have a quadruple 1-2 over here and therefore look for 4-5 4-5 4-5, a couple of 4-5s. From a trading point of view, you want to enter in the 1-2s, exit in the 4-5s, and having that one more wave 4 or 5, I mean, who really cares, right? It's also about being safe, taking some profits. And I'm not a financial advisor. I just share personal experience and you know, stuff that I do. But entering into 1-2s, exit into 4-5s, not really bothered by missing if we do get another 5 towards the upside. And you know, I don't really care about missing such a move, and I can always re-enter inside potential 4s once they are proven to be corrective structures. So as price is moving up here now, and volume eventually is moving to the downside, you start to consider, okay, well, we might be looking for eventually a move to the upside to end. Now, when I look at this structure in a bit more detail, I currently have here a 1, a 2, a 1, a 2, and then over here another one. This wave 2 has to go here. Excuse me. So we have 1, 2, 1 sideways 2, and then a WX, a little flat here in a Y, and then have another 2, another, right? So a couple of 1-2s. Then we get the push. Again, that's then your wave 3, and you're looking for your wave 4s and wave 5s. And that is when the rubbish price action again happens with lots of overlap, messy, corrective, that sort of stuff. So cool, yeah, sure. Having another 4 and another 5 to the upside would be nice. Maybe get another 4, another 5. If that's the end, it's also fine. It's really the nitty gritty here. But again, it's about directional bias as explained in the beginning. And here we can see prices moving up. It starts to overlap again. Most likely is that your lowest degree wave 3 is finished and you're looking for wave 4s and 5s, which then gives you a typical impulsive structure. Here you have your 1-2s, you get your 3, you get your wave 4s and 5s, blah, 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 couple of price action and overlap and messy stuff, moving into areas of resistance, and then eventually we look for a retracement. So in other words, once you move into wave 4s and 5s, you're slowly looking for a move to end. And when you hit areas of resistance, it is of course interesting to consider maybe a TP or even close, wait for a new range to form. If the range is corrective, look to enter again at areas of support. We do have actually a little bit of support here, a daily naked point of control. Wave 4s of a higher degree like to retrace to the price action of wave 4 of a lower degree. So of course it would be nice if price moves down over here into this structure, which also happens to include the daily naked point of control. And if this move to the downside is corrective, touches support, area of interest, look for a potential 5 up, right? And you're going to look for higher resistances again. So that's how you can approach like a final stage of an impulse. Is like, okay, you know, like I'm going to TP into areas of resistance, wait for a range. If the range is corrective, I'm happy to enter again and look for a next leg up into a next area of resistance. And it's basically going to be like area of entry, ride the push to the upside, right? Now here we already moved beyond an area of resistance, and this was the next area of resistance. And then, for example, this would be like take a TP, and then if this is proven corrective, look to enter. Price moves up, next area of resistance, right? The weekly, TP, get another range. If proven corrective, enter, look for the next leg up. And it's basically going to be enter, TP, wait for the range, enter, TP, wait for a range, and then just like do that like for every wave 4. Now, I'm not really a low time frame kind of trader. I prefer the 1 hour. So hey, you know, like But yeah, just sharing some educational stuff, I suppose. So yeah, possibly here looking for some more wave 4s and wave 5s based on the local structure here. Just be aware, you're looking at areas of resistance now as price is moving up. Very likely you're looking into 4-5s at the moment, and a move is going to end at some point. Very nice. So then we have the levels. Let me share the volume levels here on my chart. So on the 4-hour time frame, these are currently the levels that I have on my chart, the volume areas. And then here is the areas of resistance or support, where, like the time frame horizontals basically. So these are the time frame horizontals currently here at the weekly. And then I also have order blocks. So actually there's a daily order block here, but around 114, 8-hour order block, 112 to the upside. We have like 1 hour. Is that going to be very relevant? But still 120, 121 is the first one there. To the upside, I probably prefer my horizontal levels anyway. Range point of control 121.8. This is all the levels combined currently here on my chart. And if I take a volume profile, let's have a look where the value area high is. So I'll take a volume profile. We're currently at the value area high as well, pretty much, together with the weekly. Of course, creates a bit of an area of resistance. Value area high, 119.6. If I also include this little bit here, let's see what we get. Okay, basically the value area high doesn't change. So that is noteworthy as well. So that's interesting. Have a look here. If we take this section, value area high, a little bit higher, 120. So I'm just looking at some of the volume levels and see where potentially there might be some additional resistance in between the weekly and the range point of control. You might have on your chart some other levels as well. But you can see like 120 is also a value area high, and you know, just got to be aware, I suppose. Okay, then we have the news. News here today. It is Thursday, the 2nd of October. There's nothing going on today from a news perspective, at least not here on my agenda here. So Friday, October 3rd, 2:30 p.m. and 4 p.m. Central European time. There is some news, can increase the volatility, of course. And then we get to the conclusion of today. So we have to be aware that locally here, moves are ending as price is slowing down while hitting resistances. And we want to see price slowing down in volume as well. This is also like what we call the trend and turn method, which is something that I invented like a while ago. At least back then we called it different. But you have the 1-2s, you get the 3, you get the wave 4s and the 5s, and then eventually you're looking for price to move down again. So you're trending, but then eventually, of course, it turns. And what you like to see is price overlapping and volume declining. So overlap, making a couple more highs, perfectly fine, decreasing volume. Be aware of areas of resistance, as those are going to be the areas where price eventually turns around. So looking for price to slow down, know the levels above and below price, areas of resistance, support. The retracement then decides, do we get another 4 and 5 of an impulse, or is this an ABC, right? Is this move up, A, B, C? And then you get a larger corrective structure, which on a 4-hour time frame then leads to the WXY stuff, or potentially the flat. If you reach 122, we got to be aware of flats as well. So ABC up would be A, B, and then get a C down. Or, I mean, if this is A, B, C, we're going to be looking for this anyway. So then this becomes A, this becomes B. You're looking for a C to the downside. If this becomes an impulse to the upside, which means you need another wave 4 and wave 5 as explained, then the bullish scenario is that you're going to have a 1, 2, 1, 2 continuation. So the retracement becomes another 2. The bearish scenario is A, B, C. And then you're looking for a larger WXY, or if price can reach 122.8, be aware of the potential of a flat ABC. Right? And then your wave X here, or B, is internally counted as an ABC zigzag structure to the upside. Okay? I would favor seeing a retracement by all means before taking the all-time high at a later stage. Have a look at the 73 to 49K range, for example. Price got close to the highs several times, baiting longs and buys only to retrace. faking out the bias. It's interesting from a psychology point of view. Do I mind price just pushing to the upside to new all-time highs and continuing? Absolutely not. Is it the highest probability? No, I'm not really looking for that to happen. And just even if you take out the high, just straight continuation is not something I'm looking for. I would prefer a retracement by all means. Locally here, the price action is slowly slowing down. We had the highest volume move in the middle. Currently, we are starting to range and overlap again. So a couple of 4-5s, perfectly fine. Aim for resistance, then look for a retracement. Is this going to be a wave 4? Then we look for a 5. If not, we count as ABC and we look for a larger corrective structure. Okay. Now I know based on previous content that people were like, oh, we don't mind longer videos. No, I mean, I have not disappointed you with today's update. It's 30 minutes of information. Now this might be too long. I might go too much into the other direction now. It's a lot of information. Of course, people can just go through the timestamps and check what's up. But I mean, recently I was like, yeah, maybe I have to shorten my videos to 5 to 10 minutes for an update, which most of the time my updates generally are about 10 minutes, 10 minutes, 12 minutes in length, sometimes 15, but usually around 10, 12, which I guess is a bit of a sweet spot on YouTube, because if a video is too long, people might not click, which of course eventually we're here to help people, which means most of the people have to click on the video because else we can't help them, helping with the information we provide and the insights, and hopefully people get excited to learn Elliott waves themselves because it's such an incredible method. And then, you know, the video is very long. It does give a lot of information. So yeah, I can go into a lot of nitty-gritty. I am incredibly excited about Elliott waves. I love Elliott waves. I love all the detail and all this stuff. And I try to communicate my excitement to you and also show the detail, the nitty-gritty, a bit of explanation here in the beginning, how to trade such moves potentially with the 4s and the 5s. And, you know, like there's so much that comes with Elliott waves. And, you know, like it's I love it. I love it. Hopefully you love it too. It's time for me to end to wrap this up, else we're going to be at 45 minutes. So that being said, I hope that this video was helpful or valuable to you. Now on the left side, you can see the simplest way to use and trade Elliott waves without even counting. And on the right is the Elliott Wave educational playlist to help you understand more about Elliott waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye bye.